EURUSD is at a critical turning point. The pair just rejected a key resistance zone, but the quick question is this: are we about to see a bearish reversal, or is the euro preparing for another impulsive wave upward? Before I break it down, type your bias in the comment section. Bearish if you think the euro is heading lower, and bullish if you expect more upside. I'm Peter Pearl, and I'm the founder of Pearl Markets. In this video, I'll connect the Elliott wave structure on EURUSD with the fundamental forces driving this pair right now, and we will look at two angles: why the euro could turn bearish first, and an alternative case for a bullish continuation. So stay with me till the end because what happens next could define the next major wave in this cycle. Let's quickly look at some fundamentals in the Euro USD and how these things are going to affect these things. First you have to look at the US rate advantage. Even though the Fed may be hinting at cuts, but the dollar still carries higher yields than the euro. And that keeps USD attractive in global carry trades, especially if investors remain risk averse. You have to understand this. In Elliott wave terms, this aligns with a wave 4 correction at the start of the Euro USD. If you think yield spreads still matter, then type yes in the chart section. Secondly, let me go through quickly the fundamentals first before we go to the charts. And you also have to understand that the Eurozone economic slowdown is happening right now and is affecting the market. Germany's growth is stagnating and manufacturing across the Eurozone remains weak. And when growth lags, it limits the Euro's upside momentum. And that weakness reinforces the corrective pressure we're already tracking on the chart. So have you noticed that how weak European data's been lately? Drop data week in comments if you have seen them. If you have been following them at the Forex Factory, let me know. And you also have to look at the ECB's cautious tone. The European Central Bank continues to work at tiptoe balancing inflation fears with economic slowdown. And if the ECB starts cutting rates sooner, or signals hesitation, then that shift will weigh heavily on the euro. So now, if we look at the charts, now this is the alternative count. This is my primary count. I've been looking at for some almost a year and some months now. So if we go to the daily. This is currently what I'm looking at. This is the scenario where I'm looking at the euro being, let's look at the alternatives where the euro is going to be on the bearish move. So now this is what is happening. If you look at the weekly, if you look at this trend line, it is now happening on a resistance zone, and the market is bouncing off at this particular zone for some time now. If you check this particular side, the market has been hitting these sides, I think, since 2017, 2018. The market started this particular correction, and it's been bouncing off these zones. So that is a zone you have to pay particular attention at. And now the market retested this resistance from the trend line again, and we have seen a rejection. So now we have to be very careful if this is going to play out, because in rejections like this is the weekly time frame, and it's on don't just trade on the 1 hour and the 4 hour. Always look at a top-down analysis, because the market respects the weekly price actions a lot than just these short ones. So now if we are looking at this, if we go to the daily, now let's see, we are looking at a WXY and at a 333 in this scenario with a WXYXZ for the correction. So now we are bouncing at this particular one. So is the market strong enough to give us this momentum down to the downside? And that is only going to happen when the euro weakens and the dollar becomes strengthened. This is the scenario that is going to play out when that particular scenario plays out. So how are you going to look at it, this particular week on the daily time frame. On the daily time frame, this is what is happening. Now we have an ABC with the wave B giving us a WXY. Then now we are looking at the ending diagonal for the wave C with a 1, 2, 3, 4, 5, and the ending diagonal, the wave 5 hits the trend line we were looking at as a resistance on the daily on the weekly time frame. So now we are looking at, is the market strong enough for this rejection? Is the dollar going to strengthen enough? So if in scenarios like this, if the market should now is still, if you look at it, it's still trying to see if it can break this particular support of the ending diagonal trend line. So if the market is able to close and break below these things, don't jump into it. Don't be quick in jumping into trades like this. You can take your time. If the market breaks out of it, it's going to definitely give you a correction like this, and that is where we are going to get in. And if you get a scenario like that, then we'll be riding this particular wave for so long, because that is the scenario now. And there are a lot of fundamentals supporting this particular one. And if we see these things, then this particular correction is going to give us a lot of impulsive move to the downside, and the dollar demand and also safe haven flows. If market turns risk off, investors move capital into the dollar. And when this happens, the euro is going to suffer, because the demand for safety often pushes euro USD lower and forms a deeper leg of a corrective move. When fear returns to the market, the euro usually suffers. Why? Because there's a lot of things that is happening right now. Do you agree that the global fear equals dollar strength? If you agree, then type agree below in the comment section, and I'm going to look at it. If you agree that when there's a global fear, the market is going to suffer with it, then type agree in the comment section right now as you are watching it. Alternative to by the way, if you're watching us on YouTube, do subscribe to our YouTube channel. Just click on the subscribe button and on the like button. Also, do make sure that you are sharing this video before I even jump into the primary count also. So this is the alternative count. So now I've showed you in the daily. In the legendary trade room, what we do is I go deeper into the 4 hour and the 1 hour to give trading opportunities on this. But I want you to understand the bigger picture. On the primary count, I'm going to go into the 4 hour for you to know how to trade it very well. So now let's jump into the alternative scenario. First, let me quickly look at the fundamentals that is also supporting the bullish scenario. On these things. So this is what we are looking at right now. Now let's flip the chart to the bullish scenario. And here, what you could do is, if it becomes bullish or trigger a wave 5 continuation inside a larger structure like this, some of the fundamentals that will be supporting this is, first, improving European inflation data. If inflation in the Eurozone holds firm whilst US data cools, then the yield gap narrows and the euro strengthens. And that will signal that of a wave 5 impulsive upward as a momentum returns to buyers. And do you think that euro still has the fuel left? Comment wave 5 loading if you think this is going to happen. And also, secondly, US economic weakness. When if the upcoming US data disappoints, especially job and inflation, that could weaken the dollar and lift euro USD up. That scenario fits perfectly into a bullish correction phase or a wave 3 extension. If you've seen similar setups before, major NFCs, draw NFP setup in the comments, where scenarios where the economic data for the dollar, like NFP CPI, has come in and it has made the dollar very weak for euro USD to skyrocket. If you've seen scenarios like that, drop in the comment section NFP setup. So now You also look at the fundamentals, like when there is an ECB resilience. If the ECB maintains a steady tone while the Fed pivots dovish, it strengthens the euro foundation. And that divergence could drive a sharp bullish impulse that takes Euro USD above resistance levels. And that is what we are going to look at. So would you trust the ESB to stay firm longer than the Fed? Comment ESB stronger if that is what you also think. So on the charts and on the technicals, so this is what now we are going to look at on the charts. So now on the charts, we can see that we are looking at, if you look at the weekly, now we've seen a WXYZ. We've seen a WXYZ in this scenario. Let me clear these things quickly. In this scenario, a WYZ XZ as a triple trade, like a completion of the triple trade for the wave B. So now we are looking at a momentum to the upside for a 5-wave impulsive wave, a wave 1, 2, and 3. So that is what we are tracking right now. So if we look at the daily, now we've had a wave 1, we've had a wave 2, and a blue wave 1 is ongoing. So with this particular ride, is going to be a long ride. And now we've had a wave 1, 2, 3, 4, and now the market is on the sideways. I'm tracking a form of a triangle on this particular one to give us an A, B, C, D, E for wave 4. Then price is going to move up to the upside. So now that is what I'm tracking for the wave 4 setup to support the bullish fundamentals I just discussed. So if we go to the 4-hour time frame, then now this is how we are going to trade this particular one. So now in this particular scenario, we are looking at an A, B, C, D, and E for a wave 4. Though there are other corrections that can form out on this particular one, but this is the perfect scenario that we will be looking at. It doesn't mean the triangle is going to be in just exactly this shape, but I'm making you know that there's a triangle coming so that you know how to adjust yourself. So in scenarios like this, just come to the chart, pick your trend line. So now we are looking at checking how price is going to break this particular trend line that is forming. It's had a retest on it. So if price should break out of this particular trend line, for this wave 4, then you are going to get a very nice buy scenario. So now we are looking at price breaking out of the trend line, give you a small correction, but know that we are still tracking a triangle. So you are going to buy it, but this is not for the long-term buy because the price needs to break out a lot for us to know. So you can buy and be trailing your stop once there's a possibility of it coming down again to give you a triangle. So now when we get the breakout of this particular blue trend line and get the correction, we are going to buy, but we are going to manage the trade very well. But if the triangle plays out and we give the wave E, then we are going to go in on a very deep long on the wave 5, the impulsive wave of the wave 5. So that is what we are looking at on EURUSD. I'll find time and show you what I'm looking at on the DXY, but that is what we are looking at on the EURUSD. So if you see now, here's where we are. The Elliott wave setup on EURUSD is mixed up with mixed signals. Various fundamental points towards a correction, but bullish diversion could still fuel or move up. But your job as a trader is to watch for confluence. When the fundamentals and waves align, that's where clarity and precision meet. Now I want you to take, are you expecting a wave C drop or a wave 5 breakout? Comment your bias below and I'm going to ping the most accurate projection after the week's play out. So drop your charts also, what you think in the comment section, So if this breakup gave you a nice clarity, then hit like, share this video with one trader who always debates EURUSD direction. And if you want to go deeper, join me inside the per market legendary trade room. I'm going to drop in the comment section, where more technical mastery meets trading discipline to help traders stay consistent, stay focused, stay patient, and I will see you in the next video.